Hi, welcome again to another edition of Market Analysis for today, April 3rd of 2025. I'm Gio Betancourt, and this is being recorded about 45 minutes prior to the U.S. session opened by Vantage Markets. Well, the other shoe has finally dropped, and it has come down hard. President Trump's Liberation Day tariff announcement threatens to end globalization built around Asian supply chains. Now, the most striking fact about the tariffs is they are bigger than expected. Although the baseline duty on imports came in at 10%, reciprocal tariffs were harsher, with China now facing apparent total duties of 54% and the European Union 20%. Now, economists estimate the average tariff rate on U.S. imports could rise between 25 and 30% from around 9% currently. Notably, even U.S. allies in Asia were hit, such as the 46% levy placed on imports from Vietnam. The calculation behind the tariffs penalizes countries with a big trade deficit in goods, especially Asian low-cost manufacturing destinations. Now, that's consistent with Trump's push to bring factories back to the U.S., but executives now face a difficult choice. Companies such as Apple, Nike, and Lululemon have invested billions in moving production out of China to Vietnam and elsewhere. Do they replicate that stateside, hope for negotiations, or plead for exemptions? Either way, higher prices for American consumers seem inevitable. The tariffs will increase inflation by 1.5% points this year, according to sources, which says it is equivalent to the largest tax increase since the Revenue Act of 1968. Now, things look set to get worse before they get better. China has vowed retaliation. Other Asian partners will look to negotiate, but there is precious little time for that before the April 9 deadline, the day reciprocal tariffs start and cause maximum pain. Now, an era of cheap made in Asia goods looks to be coming to an end. Now comes the hard part of building what comes next. And with that in mind, we'll see how the markets are just basically in a downtrend. We have traded below the 19,000 psychological value, even though yesterday the market did fluctuate higher during his speech. It fluctuated all the way towards 20,000, and that's a head fake. It was just catching people that came in late, and they're thinking, okay, yeah, well, this is gonna rally, but no, it didn't rally. It dropped. I mean, everything across the board really had done a just basically a leg down, or more like two legs down, really. But look, so far, this level of support, I'm grabbing this low, 18,817. And I'm multiplying from this point, I'm multiplying that by 0.382%. Okay, that's not like 2%, but and that gives me this level of support. Look, this could continue to drop today. All right, it could also do another move up higher, but with all of this scenario and everything that has come into view with all these tariffs, it makes common sense that these valuations can't stay high. Things are going to get very, very expensive in the United States and obviously around the world. So it is time to enter. I'm going to speculate that it is time to enter a bear market. We are already below more than the 10% from that all-time high, and we are climbing. We're getting closer, edging closer to that 20%, which will take us to a bear market. So this could be the beginning, or this is the beginning of the bear market across the board. Look, let's take a look at the S&P, and let's do the same calculation that we did with the Nasdaq. So the low is 5481 times 0.382% minus equals 5460. So that's what I'm going to place my line of 5460 of support. And the second one, I'm going to continue do the same. I'm going to use the lower Bollinger Band. and then as resistance, the 20-day moving average, and then the 50. You could also use like this part right here, right? This area right here for a power level of resistance. But look, let's look at the Dow. The Dow also is trading lower. So we can't, oh yeah, let's just use this one. 41,303, 41,303 times 0.382% minus equals 41,145. So that's when I'm gonna set my target, 41,145. That's the level of support. And then the next one, the lower volume band, 20-day moving average, and the 50-day moving average. It's actually the medium. This right here is the medium on the Bollinger Band, but the medium of the Bollinger Bands is a 20-day moving average. Crude oil, well, crude oil, after that particular reading yesterday from the Energy Institute of America, it came out a whole lot more than what I expected, so 6 million into the network. So that dropped crude oil. So crude oil is just basically in a downtrend, just falling. $66 round term price just jumps at me, and I'm just gonna use 65 and a half around there, and then the $68 on that perspective, and then 68 and a half. As sub selling, I mean, across the board we're gonna see a pretty much sign off. Now, Nat Gas is the only one that is doing in the energy sector that is doing obviously a higher fluctuation because of the demand of the asset itself is needed. Obviously, crude oil is also. So why is Nat Gas, fluctuating higher than crude oil? Well, because Nat Gas is really, really needed across the board. So, and it's the demand of it. Okay, so the demand of it, and there is not as much of it as we want to as crude oil. So we're seeing a move to the upside on that. Now this could also be just then now it could be done with this move to the upside because we are in an hourly chart, and we could probably just right now be entering a retracement. So be careful on that. Gold. So gold yesterday also just took a very, very strong swing high, and it fluctuated towards the this one is the high again, almost but about 3150 obviously, and then some. So but it's retreating now, even though the dollar index is trading lower. It has fluctuated to the downside. Profit taken. This is profit taken. So 3,000 is going to be that psychological round value list. In this hour, this uses 3,100 as my first level of resistance, and the 50-day moving average as the second one. So, but I'm still bullish on gold. So gold we want to be find opportunities to buy. Really, all the metals are trending lower. 3160. 3140. I'm gonna use this level right here, and then the second one I'm gonna make it 3208. So selling the asset, selling it. Copper in the red. So it broke that support, that psychological support of $5. But it just big. Oh wow, this right here, this big. This is 479, which is basically where the lower Bollinger Band is. So that'll be my first level of support, and just 476. My second one, I'm gonna use the 20-day moving average and 50. I think I'm speculating that copper might just have found its bottom. Okay, and you could probably do a leg up. But this is all profit taken. Obviously, things are gonna be changing quickly for us, for the markets. So lower Bollinger Band and 80.50 for the Bitcoin. This crossing. Oh no, wait a minute. I'm gonna use 83.5 for resistance. And the second one is gonna be that crossing. I mean, in the first hours, we could probably continue to see red across the board. Okay, so the euro has made a nice rally to the upside. So I'm gonna use that swing high as my first level of resistance, and then 112, the target, boom. And then support 110, right? And then 110.5. Let's just do that right there. So we are overbought in the euro. The pound is just also rocking itself higher. So let's use that swing high right there. We also coincides with the upper Bollinger Band. So that'll be our first level of resistance. Our second, 132.5. So 132 seems to be where the market has found some sort of resistance, psychological. 131, second level. So will we have another leg up? Well, once you see this dollar index trade below 100, we're gonna be seeing higher values on the pound and the euro. So 101, not 101 is very important. All right, have a great trading day. Stay safe and be careful about those whipsaws. They can really take you out quick. Okay. Have a nice trading day. I'll see you tomorrow.